Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to a schedule of cash payments. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that information into the blue area into our worksheet on the right side. So let's see what we have on the left. We have the expected sales for January through April. So expected sales for the range, January through April being 510,000. Percent of sales for materials. So we're going to say of those sales, we're going to take a percentage of them that we're going to be using for materials. That's being 55%. Material purchases will be the same for January through April. So we're assuming that the amount of purchases will be the same amounts for that time period. Materials are paid for 1 month after the month of purchase. So we're going to have a similar kind of staggering process as we saw with the cash receipts as they go through accounts receivable, these being payments for the materials going through accounts payable, meaning we're going to pay them, possibly at least part of them, some time after the point in time that we actually purchased the materials because we purchased them on account, them then going through accounts payable. So the materials purchased last December were $44,000. Then we're going to take a look at the labor costs. The labor costs we're going to assume are actually paid in the same period that they were incurred. And then we have the fixed overhead also assuming that we're going to have the cash flow happening at the same point in time that they occur here. So let's take a look at this. We're going to say that we have the purchases of materials. We're concentrating here on January through April. However, I'm going to include December. We're imagining December here already having passed. However, we need some numbers for December in order to calculate for January, especially with relation to the amount that's going through the accounts payable. So that's going to be typical with these kind of worksheets that we're gonna have some staggering process due to the difference between the cash method and the accrual method of accounting. So we're going to say that the materials purchased are going to be equal to in December. We had the 44,000. That's what we purchased. We purchased them on account. So we're going to say that we purchased them on account that we're going to pay for them in the following month. So this is the amount of purchases, not the payments. So then we're going to say that in January, we're going to have the 510,000 times the 55%. The 55%. And I'm going to take that and divide it. I got to divide it by 1, 2, 3, 4, January, February, March, April, 4 months. So these were the sales for the 4 months, which we're going to divide evenly out into the 4 months. So I'm going to take this and divide it by 4. We shouldn't need any brackets here to do so because it's multiplication then division. So, but it might make sense for you to put brackets around here. We're going to do multiply that out and then divide by the 4 months. That'll give us the 70,125. Now, what I'd like to do is copy that across because it's going to be the same for the 4-month time period. I can do so by making these two cells absolute references and copying them across. Or we could do it this way. I could say, let's make this cell equal to the one prior to it. And then if I was to autofill that across, it'll always take the prior one. It'll always pick up the prior one. So if I say autofill, then it'll pick up the prior cell each time. So this will be the prior cell and the prior cell. So those are two ways that you can consider, making a table that has that type of need within it. So then we're going to have the payments. So this is what we're focusing in on, the cash payments. First looking at the materials, that having that strange quality of having the payments being made after we purchased the materials. So we purchased, for example, the materials in December, used them, we got the materials and we used them in December, but we're not paying for them until January in terms of the cash flow. Therefore, we're paying 100% because we're just going to pick up 100% of the prior year amount in the current year. I'm not going to negative it. So there's the 44,000, and this is going to be the same process all the way across, right? So for February, we're going to say that we're going to pay for those purchases that happened in January. In March, we're going to pay for the purchases that happened in February. In April, we're going to pay for the purchases that happened in March. Note that you can autofill this across. So if I was to delete these 3 items, I don't need to do anything special because I'm just taking one cell back. So if I autofill or copy the formula across to February, it will then take the relative reference from December to January. Let's do that. We're going to put our cursor on here. We're going to use the autofill, drag that on across, and there we have it. Double clicking on the last one, you can see that it's picking up March and of course April. What about that one? That one's kind of left out to hang. Well, we're not going to pay that until the following month in May, which isn't part of our worksheet here. And then we've got the labor. The labor, we're going to assume that we actually paid in the month that they were incurred, or these are the actual payments that were given down here. So we're just going to pick those up as they are. We're assuming cash going out for January at $31,000, cash going out for February at the $35,000, cash going out for March at the $39,000, cash going out for April at the $41,000. Then we have the overhead, which is often fixed, meaning it's often the same from period to period. Something like, for example, the rent, which will be the same oftentimes. So we can oftentimes, that's an easy one for us to figure in terms of the cash receipts. So we'll pick that up. We're going to say this will be equal to the overhead. Now, once again, I want to copy that across, so I could just simply make this an absolute reference by selecting F4, putting a $ before the B and the 20. We only need a mixed reference, but an absolute reference will work, and it's the easiest thing to do in my opinion. Therefore, we're going to then do that, and we're going to put our cursor on the autofill handle and drag it across, noting that instead of moving that cell over, it now keeps it the same. So we're picking up that $32,000 all the way across. And then we'll say that our total cash payments that we'll be taking a look at, we'll just simply sum the three numbers up above using the old sum function equals the SUM, shift 9, up arrow once, holding down shift, up, up, closing this up, shift 0. And there we have it. Now we can autofill that across and it will simply sum February, March, and April, moving the relative cell references as needed, putting our cursor on the autofill handle, dragging that over to April. And there we have it. Double click on April, double check that it's correct. Looks like it is. Therefore, I'm going to select enter. Let's put the underline here. I'm going to highlight or select these cells. Go to the Home tab up top, Font Group, put the underline there. Let's put the double underline on the total payments, selecting the total payments column. Going back to the Home tab, Font Group, drop down for the underline, putting the double underline there for the double emphasis bottom line of the worksheet. So once again, we have that staggering. That's where the emphasis could be. You can see that these payment schedules could get more complex, but you can see that we're looking for the pattern of the payment related to the purchases that will be taking place, and we'll have a familiar kind of pattern or similar kind of process, even though we might have different payment schedules. For example, here we paid all of it after the month of purchase. It might be similar to what we saw in accounts receivable, where we pay some of it during the month, some of it in the following month, and possibly some of it even the month after that, if we could set up a payment plan in order to do that type of thing.